There it is. That is the opening bell on Wall Street. We've got breaking news. The trading day is about to start, and the week as well at the New York Stock Exchange. Overnight, stocks tumbled at financial markets around the world in reaction to President Trump's ongoing trade war. Stock futures already taken a dive this morning, and now we wait to see what happens as the exchange opens. NBC News business and data correspondent Brian Cheung here with us with the very latest. Brian, obviously you have been going nonstop on this, following the market's news. The market's just opened. I'm seeing a lot of red. Does it feel like deja vu to last week and what we were seeing in the 3% and 4%? Everything is down, down, down. Yeah, well, it's deja vu, but I mean, actually, my phone is kind of blowing up with notifications of certain stocks that have reached a year low. There are entire sectors that are reaching lows that we have not seen in over a year. I mean, when I talk about the stock market, I want to emphasize that there's kind of a difference between like, oh, it's a bad day on Wall Street, and there is a steep sell-off on Wall Street. And this is the third consecutive day, it looks like, that we're going to get this, as we see the S&P 500 down by about over 2%, it looks like right now, as well as or actually over 3%, the Dow now down over 3%, and the NASDAQ, that tech-heavy sector, down almost 4%. So this is broad-based, Vicky, and I think that when we hear from, the financier types over the weekend, a number of them have kind of chimed in on this. They are expressing concern that this is not going to end anytime soon. The reason why? Because until the tariff war de-escalates, there's really no reason for investors to get back into the market. So some of the commentary I've heard is don't catch the falling knife. I mean, I think that there's kind of this, push and pull in the market where another way that people might be reading the stock slide is, okay, well, stocks are on sale, but no one wants to buy into this dip because they don't know where the bottom is going to be until we hear something promising from the Trump administration on negotiations, which it sounds like there might not be much of that happening. And I think that is the tough part, because we do hear that stocks go on sale, and when the market goes down, don't panic. It's a good time to get in if you're investing. But it's counterintuitive sometimes for folks. And you talked about a lot of finance types speaking over the weekend. JP Morgan CEO Jamie Dimon, he became the first CEO of a major Wall Street bank to publicly talk about these sweeping tariffs. Jamie Dimon is now saying that the policies of the Trump administration will likely boost prices on both domestic and imported goods, but it will slow the already weakening U.S. economy. So when you hear something like that from someone as influential as Jamie Dimon, does that reflect what a lot of investors are thinking right now, too? Yeah, I think so. And when we hear from Jamie Dimon, the reason why we care about him so much is because JP Morgan Chase is the biggest bank in the United States. So he has his thumb on the U.S. economy. He knows exactly what's going on out there. So when you hear him say, yeah, this is likely to increase inflation, and a verbate from his letter that he published this morning, he said the recent tariffs will likely increase inflation and are causing many to consider a greater probability of a recession. When he says causing many to consider, that includes economists within his own bank that are now projecting the odds of a global recession rising from 40% to 60%. That was a JP Morgan note that came out last week. So what they see is very concerning. And I think that that's going to be amplified throughout the finance community. And I think, Vicky, what we do have to talk about here is not necessarily just the stock market slide here. Yes, that's going to impact people that have 401ks. Yes, that's going to impact people that are doing day trading. Yes, this is going to impact the big hedge funds. But you do at some point start to wonder when the stock market slides are so substantial that it could manifest into something like a financial crisis. Because, and again, I want to be very clear about this, that's not what's happening right now, but there have been episodes in the past where very volatile movements in the stock market that happen very quickly can break hedge funds. They can blow up. And when that happens, there's a domino effect, because all of these financial firms are intertwined with each other. I'm not to suggest that this is something that could be like 2008, but people have been talking over the weekend over the concern that U.S. Treasury markets could dry up, the stock market could dry up. There could be a lot of ripple effects and domino effects where a tariff crisis turns into potentially a financial crisis. Right, a recession. That's what everybody's hoping to avoid, but we don't know. And when someone like Jamie Dimon, and as you said, some of these other voices weigh in, they're not just weighing in with their opinions, they are influential as well. So I think people are reading between the lines, under the lines, above the lines. Can we see which sectors, which companies particularly, Brian, are taking the biggest hits this morning? Yeah, we don't have a full screen of that, but I'm looking at the screener right now of all the different types of sectors, and it seems like there are some that, some do better than others, but
I mean, it's red across the board, Vicky. I mean, when you look at the sectors that aren't hit as bad because they're all in the red, I'm looking at consumer staples, actually. That's one that historically over the past 3 days or so has been one that hasn't been hit as much, whereas the overall broad markets are down something like double digits. I think over the past 5 days, the consumer staples are only down about 6%. That's going to include brands like fast food companies, your McDonald's. It will also include companies, I believe, like Campbell's Soup stock. Vicky, usually those stocks, when they do better than the rest of the stock market, usually that's a recessionary play among investors because they're trying to hunker down into cheaper food options and canned foods that people might have to turn to in an economic downturn. So again, what investors are betting on isn't necessarily what's going to come to pass. But when you take a look at the broad-based losses, it's across all sectors, including, interestingly, tech. Tech is not an industry that would really be subject directly to these tariffs because they don't export physical goods. So when you think about a Meta or a Google or an Oracle, those are companies that aren't necessarily directly impacted by if you put a 25% tax
versus an Apple.
Versus an Apple that makes phones and then they ship it over from China. But the tech stocks are selling off, too. In fact, the NASDAQ is having a worse morning than the overall indices, which tells you investors, they just don't want to be in stocks. It's not even about which companies are more exposed to one or the other. It just seems like people are just dumping stocks.
Is anyone making money right now? Are there any companies that are profitable right now? All this talk about bringing manufacturing back to America, is it happening? Is it working? Is it promising for American companies that make things here?
Well, I think when it comes to the policy of the tariffs, any companies that would benefit from that won't see those benefits for years to come. Because the idea here is that, first off, we don't know how long these tariffs will be put in place. Because as long as they are put in place, it might marginally benefit the companies that are already kind of reshoring or have all their supply chain in the United States because they don't face that price pressure. They could sell at a lower point and still make decent margin up against their competitors that are making something in China. But when you look at certain types of products, like, for example, smartphones or laptops, there are no domestic competitors in that case. So I think there are very few, for example, American smartphone makers. I can't even necessarily think of one that manufactures in the United States that would benefit from that. Now, if there is a reshoring and over the next 4 or 5 years, there are factories that are put up in the United States and then they can find the labor to staff those factories and then they can make, but that we're talking about years, maybe
and
decades and billions of dollars in investment as well.
Before you go, let's talk about the international markets. We're not just seeing all of this sell-off in the U.S. European stock markets have dropped sharply today. We are also seeing that in Asia. They have seen their worst drop in decades. What are these tariffs doing to the global markets, and do we think it's going to get a lot worse before it gets better? Yeah, well, I mean, you look at the Asian markets, which I believe closed in just the last few hours, but the Hang Seng Index had, I believe, its worst day since 1997. And that is not a good comparison because 1997 was the Asian financial crisis. So the Hang Seng Index going down, I believe, is 12%. I mean, that is a collapse. I mean, the whole market lost 12% in one day. I want to point out that with the Asian markets, and this includes the Nikkei and Japan, all those Asian markets, they are reacting to the news from Friday that China was going to counteract the U.S. tariffs with a 34% reciprocal tariff of their own, which will take effect Wednesday of this week. That announcement came out after the Asian markets had already closed on Friday. So you could read into, like that, just because the Asian markets fell by like 8, 9, 12% doesn't necessarily mean that that's going to get mirrored here in the United States. But nonetheless, I mean, down, 3% I'm looking at. I'm just making sure that things haven't changed in the time that we've been talking. But about 3-4% across the major indexes in the United States. It just underscores this ripple effect because, again, the reciprocal tariffs in the United States, the so-called reciprocal tariffs, will take effect on Wednesday. It's after that date that you might expect to see more countries announce their own actions as well. Retaliation as well.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.